Okay, hello and welcome to today's session on a Sunday. So it's Sunday session by Bretton. My name is Kenny Simon. Welcome, and we have just started right now, we will actually be going through mainly crude as usual, crude oil, both WTI, UK oil, and also gold. And basically, we've seen a lot in the markets now. There's a lot of tricks going on, especially with the cut in correlation, the correlation break between gold and the US dollar. So it is still going on. So that's part of the reasons why some of the traders, especially retail traders, has actually been a little bit confused with using the correlation quite a lot between gold and the US dollar. So they get a little bit confused because they think that this is how it's usually is, and it usually will be correlated that way, but now it's not the case. So right now it's a negative correlation between the bond yield, the returns from the US bond or treasury yield, especially the 10 years one, and that is negatively correlated to the price of gold. So that means that if the yield keeps dropping, then that is going to be giving the push to the upside for gold. Okay, so we need to use that correlation in a way, but also in the risk element of things going on as well, with the current situation with vaccination, as well as the cases that goes up. So right now, I think we are at a stage where the governments are into the vaccination process, and they are gearing towards more vaccination. So vaccination versus the cases, current cases, growing cases, so that management of that actually does impact a lot of markets, especially in certain countries like Australia and all that. Of course, the economies of Australia, the manufacturing side, the labor force and everything else. But on the other hand, also it impacts the movement of goods using petrol, using oil. So whether or not the demand of oil steadily increases with the management of OPEC and the rest of the big boys to control the demand. So we want to look at that reflection from the charts, through the charts as well. Okay, so what we can actually do right now is to look into gold. Also, I expect that gold's prices will move as well quite a lot, mainly because of the cryptocurrency movements in the market. So we have experienced a good rise about a week and a half to 2 weeks ago of Bitcoin, for example, and then it slumped down again last week, close to about 30,000, almost 30,000 for Bitcoin price to drop as well. And that is mainly because of governance, things that got to do with regulation, and it has impacted one of the biggest basically exchange, which is Binance. So one of the biggest Binance. So because of that, that has actually dropped the price for cryptocurrencies, and that could actually give a ripple effect in all the alternate coins, all the other cryptocurrencies as well. And then when that ripple effect actually happens, then it usually has got a ripple effect onto all the other currencies, FX world, as well as what do you call that, gold and precious metal as well. Okay, so all these are assets, and it does depend on whether or not excuse me, is giving a lot of fear in the market, whether it's risk off, risk on as well. And together with that, all the ongoing things that are going on from tomorrow onwards. So we are already in August. Happy new month to everyone. So the month of August has got quite a number of things to actually expect as well in terms of the fundamental side of it, and if you type economic event as well and stuff like that, we want to also see whether or not the month of August is actually busy with event that will actually impact oil, gold, for example, and also all these very big meetings, whether or not it is actually a slow month. In the European side of it, it's sort of a slow month, especially the European Mediterranean side of it is holiday month. So because it's just really, really hot as well in all areas, including Italy, southern Italy as well. Heat waves with Greece and Cyprus as well here, and various others. So that would actually be a destination for holidays. A lot of European countries are opened as well because they are gearing into the vaccination very, very aggressively here in this part of the world. So with that, I think we will still see liquidity in the first week or so of August, first 2 weeks of August. I'm not sure about from the middle onwards, but then let's take a look at what we can actually expect. We've got a lot of talks about oil and gas and everything else as well. And that actually is going to help us understand. Let's go to FX3 economic calendar. And we go for the month just to actually look at whether we've got any alerts in terms of economic data. But I'll present tomorrow on tomorrow's session on overall a risk event. There are some meetings going on and things like that that are not actually in the economic calendar that could actually impact the US, European zone, as well as oil. So I will lay that one out tomorrow. But today we want to look at just as a whole in terms of how active the economic data is, especially for the currency side and especially for the dollar, in order for us to actually look at what could actually impact precious metal, especially gold, and also oil in some respect. But oil is usually driven more on the by geopolitics as opposed to economic data. Gold, on the other hand, it is indirectly connected to economic data, but then it's actually based on what goes on in the US side of it. So the US economic data does play a very big role into gold's movement. Okay, so here, for example, let's look at this one here for the whole month. Okay, whole month of August 2021. So here, as we can see, we've got retail sales, but what I want to look at are actually US ones. So as you can see, we will start with more manufacturing numbers and data by the US, especially the ISM. So that would actually definitely impact a lot the US. I'm just focusing on the US first so that we can actually then talk about gold as well. And it's also important for us to look at the JPY CHF data if we have any, and we do have more Japanese data, so that could actually then give us a little bit of an idea of the risk of side of things, with a lot of whether or not there will be more buying of JPY as well. That does actually impact a lot. We see New Zealand numbers. On the US side of it, we've got more ISM, PMI, so more on the manufacturing side of it, which is also very important for us to look at the current economy of the US, and then it does actually impact the interest rate decisions as well, and then the bonds, yield prices, everything else. So that's why I'm just focusing more. Tomorrow we'll talk a lot about Thursday, August the 5th as well, mainly because it's really crazy with GBP. So we have got loads of talk about tomorrow about all the currencies that we have, mainly on the GBP crosses, because I think I myself would be very interested in trading the GBP, but we'll talk a lot more about it on currencies tomorrow. But we have got a lot planned on patterns as well, emerging patterns, various other levels that I see it happening right now from 2-3 weeks ago, especially for GBP crosses, Euro crosses, and also Canadian, Australian, and New Zealand crosses. So I still see a good opportunity for trading. And I think from tomorrow onwards, we might expect more movements, but I will lay out the risk events that is really important for you guys from tomorrow onwards, okay, on what are the other meetings and events gathering as well that may impact a lot of other currencies as well as gold, oil, but they are not in the economic calendar. So we do have lots of manufacturing side of it, especially for the US. We also have the CPI, very important consumer price index as well. Now, the CPI, consumer price index and all that does actually have correlation with some movement of oil cargoes as well. It does actually impact other economies in reliance with US oil. So that numbers there can actually make a lot of difference. That actually will be happening from the second week of August itself. And then we see a lot of how you call that, gross domestic product, GDP, and consumer related data by Japan, because Japan is also one of the biggest oil buyers as well. So that might help us to gauge demand of oil as well, and also the current economy. So country like Japan is also good to see what they are up to, because they are impacting the safe haven side of it for us to trade safe havens for the buy, but also for consumption of oil, and also GBP, because the current economy in GBP does also relate to how many oil rigs there are. So now Baker Hughes, Chevron from the US, and also all the UK ones, especially the Shell and the Shell, the BPs, and all that, they are actually coming up with rigs count now, and it has actually been increasing for the past 2-3 weeks already. They've been giving numbers that they are planning for more oil rigs to be put in the offshore side of it. So that I'll monitor, and I will also have that side of it given to you guys in tomorrow's event, in tomorrow's session, sorry, because it's important for us to get the numbers, the exact news from Monday onwards, because we are relying on news that has been closed as of Friday from the big producers and explorers of oil and gas. So then we will wait, usually Monday onwards before London Open, they'll have some bulletin that they release internally with their staff and all that. So I will share that as well to my friends who are in the oil and gas industry. Okay, so Wednesday, August 18, quite heavy as well. And we see that it's quite consistent on all the GBPs as well. So I'll monitor the economic plan of GBP together with the oil producers production for UK oil especially. And it has some ripple effect onto what's been decided by OPEC as well for the US oil. So I think from tomorrow onwards, we should actually be able to gauge and to get more news on what would actually happen in oil. But for both UK oil and US oil, I see a lot of potential for us to actually trade. But before we talk about oil, I think it's best we talk about gold at this moment of time. So I'm bringing you to the charts at this moment for gold. So I've freshly drew areas and then a pattern here, which is a geometric ABCD pattern, giving us a little bit of a hint of where prices could actually go up to, if at all we are experiencing bullishness in gold prices or gold moving upwards. So here, for example, it's really interesting that after drawing this pattern as of yesterday, I can see that the centroid itself is basically where the price is right under the centroid area. So this centroid red line points out at 1835.09 for gold. And I see that it is trying to challenge and flirt with this level. And if it does actually pierce through, so in other words, if prices go above 1835.09, let's say 1836 onwards, you may have a good chance to actually buy gold, but you would need to exit at 1836. 1836 area, if you can, 1863, sorry, 1863 area to actually exit. You've got another exit area at 1877.54. But tomorrow we'll polish up this prices here. But as of now, that these are your take profit area. But your entry area should only be for a buy only after it goes above 1835.09, which is 1836 onwards. So 1836 onwards would actually be your trigger for a buy. And because it is also still in between two zones, actually it's an overlap between your buy zone and also a sell zone in a way. So you can see that I've overlapped this this box right here, which is slightly pink and red right here. This one here is overlapped. It's a red selling zone overlapping the blue zone that is in the background. So because it is overlapping it, basically we need to be careful as well. So anything can actually happen in within these zones. Actually, this is what it means. So it could actually come down here and go sideways first and then go up, or it can actually break out, come back down to this area and then go up. So what determines the solidity or the clarity of the trend will actually be the fundamental side of it in the US. So hence the reason it is important for us to watch of what is going on and what kind of data would actually be released as of tomorrow onwards for the US. So as I've mentioned, we are looking at more manufacturing data and things like that. So with the manufacturing data, especially ISM and various other things, that would actually be coming out through the news tomorrow onwards of whether or not they are expecting the economy of the US to stabilize. Now, if they say these positive things about the economy, that could then actually have a direct impact into investors' thoughts and decisions over the treasury bond and also the yield. So then all the news will start coming up because we are having euro starting with the data, but we don't really have US, too many US data, but we have the manufacturing side of it. But that should actually give us some hints from the UK open session. From UK open session, they may already have some news expectations for the UK or for the US economy. That actually would then help us understand whether the yield continues to drop or not. Because at this stage, as of Friday's close, if you type in US Treasury bond yield, yeah. So it is negatively correlated to the price of oil. So if we continuously see news that are pushing or pulling the price of the yield, the yield to go down, then we will be seeing more push of the gold going up. Okay, so here, for example, 4 days ago, let's just go back down. A day ago, yesterday, for example, Treasury yields fall after softer than expected inflation data. So all this inflation data is actually correlated to all the other data, economic data, data that we will expect tomorrow as well. So hence the reason we want to actually look at all this correlation and connectivity, which will then help us to determine the price of gold or the forecast or forecasting the trend of gold. So here, still continuously fall, we want to also see this kind of headline tomorrow onwards. So if tomorrow as well, more headlines of falling yields, and falling yields, then we can actually expect more confidence in buying gold. Okay, so right now, technically, we need the price to cross over anyway. So I would expect that the price to go above, to go firstly, number one step, the price needs to go at 1836 and above. When it does, then we monitor the news and the data, and more headlines talking about yield prices going down, then we have more confidence that the price is actually in within the buy zone and solidly following the buy trend. Because at this moment of time, tomorrow onwards, if it does cross the 1835.09 area, it is in between the buy zone and the sell zone because of the overlapping of this box as well. So almost anything can happen, but it all depends on the yield situation and the headlines about the yield and the bond, okay, in the US. So that would actually, if that is a really negative and falling of yield, that would then solidify the buy zone of gold. Then I may be able to tick off this box, this overlapping selling zone box. Okay, now I cannot take that off yet because it is an overlapping and we don't have enough sufficient data news to fuel the trend. So this kind of situation is actually on a limbo. The trend itself is on a limbo at this moment of time between strong sell and strong buy. So it is in a limbo. It's not really making sideways, but it is ready to bounce or ready to fall kind of thing. So it depends on the bigger boys at this stage as well in the economic side of it, especially for the US. Okay, so this is what the scenario is for gold. Okay, so I've laid out the red line here based on Centroid for the trigger price for a buy. Now, this buy price here is because it is a trigger price for a buy, not a trigger price for a sell, mainly because I'm favoring the upside much more. And I wouldn't be actually doing any sell at the moment, mainly because the bias of the trend itself overall is to the upside. And I wouldn't want to get trapped in selling if I see it falling, even though it's a correction or corrective move, for example, it is a little bit too risky to do that. So I would prefer to use this red line base, this horizontal red line at 1835.09 as my guide, based on the centroid of this pattern to actually see whether or not price crosses the red line for me to aim at buying the gold. Okay, so we have got three yellow lines as my TP. If, only if and after the price has actually triggered 1836, for me I would enter at 1836 to buy, exit at 1863 or 1877.54. But we also have another TP right here. So you've got one entry. You can enter again as it gets stronger and then take a second TP, enter again as it gets stronger, and then you aim at your third TP at 1901.67. So anything above 1901.67, it'll probably be a lot more confident for price of gold to go up and go up even more. But we need the fundamental side of it to actually confirm what could actually help us in order for it not to return. Also, if it actually returns, if it does actually retrace, we need to also be in a strong position to not get out of the trade, even though it retraces. If we are at the right side of the market and we know that it is really a strong market, like all the other pairs that we will talk about tomorrow, all the other pairs that are on the what do you call that, floating at the moment, GBP USD, CAD JPY, especially various others, they are all returning to the point of where we have planned the entry as well, but mainly because of the solidity of the trend that is expected. So this is where we want to keep you safe as well, in understanding that we use bigger data from the bigger time frame or higher time frame, only because it will keep you safe at the end. Sometimes we cannot really predict the entry so much, but then we can, that's why exit is very important, whether for you to hold, not to move, not to exit yet and stuff like that, does actually determine whether or not we can turn the trade around. So yes, at certain times we need to stretch out the stop loss, but it is not an easy task because it requires a lot of discipline to firstly understand the trend correctly and accurately, and then to actually, keep steady and hang in there while it is actually giving us losses, and other people are actually just, having all these short-term trades and hitting TPs, for example. But then that's just the style of trading that we all prefer. So you can actually turn it in any way you want, whether or not you want to cut your loss early and then you trade, short term, and gather your pips that way as well. It's no problem, or combine it with this style. So we've got all these bigger patterns as well to discuss tomorrow. So hence the reason we want to monitor a lot of data so that we can actually get a better idea on oil and gold, all the crude oil and also oil. But definitely there are loads of trading activities and also trading opportunities. Okay, so back to gold again. I think it's clear at the moment because we will go over it again tomorrow once the price have actually moved. Then we can actually see whether or not it has pierced through this red line, 1835.09 area. Okay, there's an overlap, as I've mentioned, between buy zone and sell zone as well. But there's a lot of expectation of movements, I would imagine. Okay, because we've got this candle right here, which makes out the B2C of this pattern actually, but the C point is here lower. So that's B, that is C, and then you've got A, B, C, D. So D is your projected area of where or how high it could actually go. And also overall, I mean, I'm looking at the weekly chart at the moment, but then we can see it's already giving hints of going above all the three lines as well. Now, this on the weekly chart, trend-wise as well, it's favoring the upside more than the downside as well. Okay, so it doesn't mean that we don't have correction. We probably will have correction as well, but we need to be careful with gold to understand how we actually trade in smaller numbers. But the bigger pattern is a bullish pattern for gold. Okay. So any questions with gold at the moment? Until tomorrow, we can actually go into it deeper while the market is active. Any questions before we go to oil and also UK oil? Oh, good. Thank you. All right. So, yes, now we will go on to US oil. Now, with US oil, I've also drawn a bullish ABCD pattern, sort of looks like it is mirroring oil, a gold's sort of ABCD pattern as well in this case. And the movement is quite similar in a way. But the prediction is also towards some bullishness to the 80 area. Now, with oil, just to remind you, we can use the psychological numbers. So because the projection of oil is to the upside, now at this moment of time, fundamentally, it has been a lot of talk about increasing both supply and also experiencing an increase in demand. So it has a lot of things got to do with the number of rigs that will actually be announced as well. And we need to monitor a lot of news and fundamentals for this whole week, because they will be talking a lot about all the producers of oil exploration as well. And rigs count has actually been going up, which is basically production. Okay, so production needs to be lower than the demand, and then the price will actually then go up. So that is where we need to monitor. Now, in terms of prices itself, I've laid out this pattern for US oil. We have closed just under 73.50 at this moment of time. So using the psychological number, if we want to buy oil, US oil, we need to buy at above 73.50. So 73.60 onwards, 73.60 onwards would actually be good for us to monitor from tomorrow. If it goes above tomorrow, 73.60, because it's just too close to 73.50 at this moment of time, it closed at that price. Just under 73, just under 73.50. So I think it needs to actually go up a little bit more by the candle's body, not by the wick. So tomorrow, if we monitor how the candle's body is going to be, especially in the shorter term time frame, like 4 hour and 1 hour, then we might get a better idea. Mainly because in the shorter time frame for US oil, it looks like it has actually retrieved and come down and correct itself. So I see it potentially for it to actually come down perhaps at the 73. It's very close anyway. It closed at 73.34. So I see it coming down, let's say, to 73.31 area and then find support to go up. But overall, as you can see, all the three lines are here, pointing upwards from the 1 hour chart onwards. And then you can see a bit of entanglement here. So in other words, I think we will be experiencing correction to the downside first before it finds a support to actually go up and go up much more. So here, for example, I can see that the potential of it to come down, correct itself to 70-80s area is quite possible, where the centroid is as well. Because where the 70-80s is, we can see that there are all the support area right here, and they're quite strong and they're quite solid support area at the 70-80s area. So there is no surprise that it wants to correct first so that investors and traders can buy it cheaper. So I would think the most likely scenario is for it to actually drop, come down to 70-80 area, or even around here, because the border of this buy zone is at 71.70. So it could actually go two ways. One is to go down to 71.80 area right here, or if something is fundamentally or news-wise pulling it down much more, then it can come down to 70-80s area. So anywhere between 71.80 and 70.80. So we need to monitor for tomorrow onwards, just to see how well it respects the border, the lower border of the buy zone. If it breaks out of that, then it means that they want to go lower in order to actually buy cheaper. But then overall, it has lots of upward type movement, because even in this chart, on the daily chart itself, we can see that you've got higher highs and all that, but then we need this to be a higher high, right? So it needs to go above 74, plus, then we've got a lot of continuation of upward movement. But at this stage, we are in a limbo with what OPEC is going to announce, with all the rig counts and also exploration projects, whether they are, digging more oil or not, and stuff like that, where they are already stabilizing things between supply and demand, but the decisions are not very clear yet. So I think the whole week upcoming will actually be clearer and clearer decisions are going to be made. Then we can actually see the reflection right here. So if we see the reflection of body of the candle going up into different areas, like going into the 73.60 and above, and then going above this resistance zone right here, which is really important as well for us to watch out. Because this resistance zone right here is in the 74.50s area, you see. So that is another area that would actually push up a lot more. And once it goes beyond this one here and beyond this one here, then we are into a very good zone for the buy. So it's not at the stage at the moment. It is in a very sensitive stage. It will go down a bit, up a bit, down a bit, and then go down a bit, and then up. That kind of movement will actually be because of the decisions by big groups in different countries as well. So they need to stabilize that. So this is the area zone that it might actually play around with a bit of sideways as well, between 71.80 to 74.50 area. Okay, this is where it is going to be playing a lot in that area. Okay, so this is for oil. At this moment of time, 73.60 is your trigger price for a buy. And then maybe if you are buying, let's say tomorrow 73.60, make sure you exit at 73.73. Okay, so 73.60 you buy, 73.73 you get out, just so that we are safer, because it's not a time to actually look into laying your oil trades open too long, and it's only these very minuscule smaller ones until things stabilize and the trend gets stronger. Then we can actually leave it a little bit more, get a bit confident, then it should be fine. Okay. All right. Now we look into UK oil. UK oil is a similar situation, but I would expect because of the rig count news event, things that are very much favoring the UK side of it to produce all this news and update us with a lot of bulletins and news and all that. I'll be updating you throughout the week as well on UK Brent oil situation, because they are awaiting a lot of reports, bulletin, updates, rig counts, many other things, explorations, and various others on the UK side of it. So that could potentially move it there. But the good thing as well, though, is that it is giving us a bit of positive hints, especially on the chart. This is a monthly chart, but it's got a very nice pin bar right here, giving us a signal that it's going to be difficult, not impossible, difficult for it to go down further. So it is actually a positive type hint for it to have some expectation for it to go up. But I want to marry more news starting tomorrow onwards, so that it can actually justify and give us a better reasoning of price as well. So here, for example, if I do a trend line as such from this area here, okay, now this is a trend line with 2 touch points, but if at all it corrects, it could actually come back to this trend line here, and that would be at the sell zone area. Okay, it'll come back here, and then we'll see what it does. But at this moment of time, the price of UK oil or Brent is in within the what do you call that, in within a buy zone. Okay, so tomorrow's news, again the same like US, we will then be able to see whether or not it can actually go beyond 75-80s area. So what I see potentially happening is for price to go above 7500 first, because it is just too close to 7500 psychological level. It closed at 74.99, so it's actually closed at 75 exactly on a psychological level. So we need price to go above 75.00, at least at 75.10 first. So now do nothing. We cannot do anything yet unless we see how the price of UK oil is actually respecting the 75.00 psychological number first. Okay, this is very important. So if it does go up tomorrow and trigger the 75.10 area, and then it looks like it's going up a little bit more, then the 75.30 would probably be a better price to buy, and then we can see it going up from there on a lot more. So I would suggest no pending order yet, because we need to trade very sensitively with both UK and US oil. Yes, we can trade it on the buy side, in my opinion, but in very small little bite pieces. Okay, so we've got 75.30 here, potentially an area for us to actually buy, but I also look at an exit area right here at 75.62, so, or 75.63, or even 75.60. So what I think would probably be good is to firstly look at how the price is going tomorrow with the body of the candle in various time frames, short term, medium, and also long term, and we look at how that body is with no wick or with very long wick. And then if it starts to trigger the very close to 75.30, then you can actually start to have that price triggered with a pending order at 75.30, and then you exiting at 75.60. Okay, so 75.30 to 75.60, I see a small window opportunity for a buy, but not yet. We are not planning doing anything pending order, nothing yet, until we get a little bit of confirmation from tomorrow, from the technical side as well as the fundamental side, to see what is going on. So we will talk about oil, UK oil tomorrow as well, US oil tomorrow as well, and also gold, commodities in general, and to monitor the price that we have stated today. So when the price action moves, then we can actually get a confirmation, and also together with the news and things that are going on in the market fundamentally, to marry fundamental and technical, then we can get a better decision to trade from tomorrow onwards, whether it's oil, gold, or all the other currencies we'll talk about tomorrow as well. Okay. So there you go. This is sort of a brief one, but then it's more of a monitoring of price session today. There's definitely opportunity to trade all the three: gold, US oil, and UK oil, and also a lot of currencies I see potentially from tomorrow onwards as well. But it's best for us to maintain this session as of today in the price monitoring for tomorrow, these three especially, gold, US oil, and also UK oil, okay? Because I've laid out all the prices, and then tomorrow we'll be able to look at all these area, whether it has been respected, whether or not it's not looking that good or is looking good, and stuff like that, okay? So here, I think I may have to adjust this centroid area was an 1821 area right there. I think we will adjust that tomorrow as well, because I think there's a bit of a drawing, the distortion of the pattern itself. So I will start to draw that tomorrow itself, fresh pattern tomorrow, and we'll just redraw that again so that we can make sure it's actually correct with the centroid area as well, because I've just noticed that the centroid, it's maybe the price that I've given 1836 was not actually based on centroid, but it's actually based on price action of a resistant, very strong resistant area, or a resistant sell zone area. So it's still okay with the 1836 area to monitor until it goes above, but it's also quite far away. So I want to look at shorter term. What can we do tomorrow onwards to trade? How short term can we actually trade tomorrow onwards as well for gold? Okay. All right, guys. I think that's all I have for you guys in today's session, Sunday session by Bretton. And tomorrow we will be having the Monday's market outlook, Monday's week ahead session by Bretton as well. And we will be looking into the whole week's trading opportunities, trade ideas, as well as trade signals. Okay. Any questions at all, guys? Any questions? You guys all right? All good? Okay, brilliant. I think if no questions, then we will end the session for today. Okay, and to have you guys relax and enjoy the rest of your Sunday. And meantime, I will say a big thank you for attending my webinar and spending time with me today in this webinar. So with that, once again, thank you very much, and enjoy the rest of your weekend, and have a good week ahead as well. And see you guys tomorrow. Take care, guys. Thank you so much. Bye-bye.